Hello everybody, hello, good morning. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com. I want to welcome you to my Markets Talk webinar, which happens every Monday, Wednesday, and Friday. So today is Friday, the end of the week. Ladies and gentlemen, welcome to US NFP Day. We're going to get some important economic data sets today, certainly. Apart from the US NFPs, there is something else brewing in the market. So look, I'll talk about all that in a moment. So hopefully you'll enjoy the session. Stay tuned and I'll see you in a bit. Ladies and gentlemen, hello and good morning. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today is Friday, ladies and gentlemen. Yes, the 9th of January 2026. So we are already 9 days into 2026. I hope so far the year has been a good one for you. Ladies and gentlemen, we're going to look at the markets. We'll see what's happening. Today is an eventful day in my opinion, and not only because of the NFPs, but because of some other events as well. Look, before we go any further, as always, let's quickly have a read through our risk disclaimer. Let me find it. There we go. The content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. In the meantime, I'm going to put my usual good morning in the chat room. Good morning, everyone. There we go. Ladies and gentlemen, I have to remind you as well that this session is a live one. It's alive. You can feel free to ask questions if you have any. Honestly, small, big, doesn't matter. If I know how to answer the question, I will say, yes, I know how to answer the question. But if I don't know how to answer the question, I'll say, you know what? I don't know the answer, but I'll try to find it for the next session. I'll try to find the answer for the next session. Look, before also we jump into the charts, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. Ladies and gentlemen, let's jump into the economic calendar today. Actually, first of all, yesterday we had a few pieces of information coming out. We had some like the trade balance from Australia, which kind of diminished a little bit because exports really dropped. Imports kind of were on the lower side, but exports for sure dropped. Consumer confidence in Japan did come out on the lower side as well. Switzerland inflation kind of remains stable, flat, to be honest, and I really don't think that there's going to be something really spectacular coming out of there for any time soon. Then going further, consumer confidence in European Union, that was a bit of a mixed feeling number here. Better than the forecast, of course, but still worse than the previous. Now, PPI came out minus 1.7%. I mean, this is very interesting. The previous one was at minus. The European Union is really experiencing, it seems like that, it is experiencing deflation. Well, maybe because people are not spending, too much, because again, everybody's worried because you have your issues with and geopolitical issues, and Europe is involved in all this. So hey, I think the position of the people is understandable. Consumer confidence, yes, as I said, it was in somewhere in between. Industrial sentiment, a little bit of an improvement, but still, unemployment. Now, unemployment improved apparently. However, still, like I said, people are not really spending too much. Trade balance in the U.S., massive improvement here. Massive improvement. Exports improved. Imports declined a little bit. Probably this is what the current administration will say about the fact that the tariffs are working, and this is what's probably what's going to be the justification for when we're going to get the verdict today. Today we're getting the first step, as I understood, of the Supreme Court deciding on whether the tariffs that were imposed last year were lawful, and if the president didn't really abuse his power. So yeah, it's going to be quite an interesting day. I think, like I said, yes, the job market is going to be the interesting one. But let me just finish off with yesterday. Initial jobless claims came out on the higher side, not the forecast side, but on the previous side. So yep, it came out higher than the previous, but still lower than the forecast. Maybe the forecast was a little bit over exaggerated to the upside. Now, going into today, this morning, household spending, Japan. Why I'm not seeing any numbers here? Let me just refresh the page here very quickly. Just to see if we can actually get something here. Yes, there we go. Household spending improved. Okay, 2.9 against against the previous -3%. Wow, that's an improvement in Japan. Okay, that's fine. Maybe it's because of the holiday season. Maybe household spending month on month. There we go. That's the big driver here. The forecast was 2.7, but yeah, maybe that's why Nikkei is kind of having a nice little push higher. Inflation rate in China came out 0.8 plus 0.8, of course, on the year-on-year basis against the previous plus 0.7. The forecast was plus 0.9, so it kind of always also in the middle. PPI on the lower side still, but kind of a slight little growth moment here. German trade balance, whoop, there we go. Exports declined significantly, I would say. Imports rose, so there we go. That's what we get. Unemployment rate in Switzerland, 3.1. That's a little bit of a bummer. Look, going further for today, what can we expect? Well, what can we expect? Basically, we have a lot of important data sets. Like I said, the U.S. NFPs are coming out now. Let's have a look at what are we expecting today. 60K, at least that's the current forecast. 60K against the 64K previous. Let me just double check another source just to see if it is kind of correct in a way to say that. Let me just quickly double check. So non-farm payroll 60, yep. So some even actually forecast 45K. Now look, it's going to be an interesting one, of course, because we had a recovery last time. And but then again, so we had like a little bit of a stupid moment last time because the data was not the most trustworthy data. We had it one time and one go. We got the November and October. The October number was this, basically dropping to minus 100,000 below that, and the November number kind of straight away jumped into positive territory. So that, like, we call it a little hiccup, right? We'll see. We're now getting back to normal. At least it seems like that. However, I have to say that it will take a little bit of time, and this is what I said on Wednesday. It will take a little bit of time for us to start trusting BLS data, because again, it had its bad moments. It was shut down, and the whole data got mixed up. Now they're getting back into normal, or at least trying to get back into normal. So yeah, let's see what happens. And for now, look, my problem is that the moment we're in this period right now when numbers are not seen more than 100,000, right? I mean, look at this. I mean, like only like a year ago, right? We were around like 100,000, 200,000. Now we're struggling with, staying afloat, staying above zero. So that should be a little bit of a worrying sign. And the most important is that when the stock market kind of is rallying, everything seems to be so nice and good. Everybody's so happy. But we understand all the corporations are happy because they're getting, we're waiting for the Federal Reserve interest rate decision, because again, we're not going to get a rate cut this time around in January, at the end of January. But certainly, this is the expectation right now, but certainly later on, I think before April, before May, I would say we should be getting one cut in a way. So at the moment, the forecast is that up until April, we're not going to get a cut. However, I think that the stock market will correct a little bit lower, and they will try to save the stock market by lowering rates a little bit. And also, Jerome Powell is leaving in May, so it's kind of I said it already several times. I think this is going to be like his farewell gift to the White House. Hey, like, here you go, here's a rate cut. So I do believe in one cut by the end of April. Okay, look, and what I was saying, to continue the previous thought that about jobs. Look, we're not seeing, like I said, we're not seeing big numbers, right now, because although companies are doing fantastic, at least they're reporting that, still the problem remains that all the funding kind of goes into AI, which is kind of meant to substitute the worker. So why to create more jobs if I'm actually getting more money by trying to figure out a way not to employ people? So there we go. So you'll have to think of this, or should I say, the government will have to think of this eventually, because as always, everybody's focused on the short-term gains instead of like a longer-term, finding a solution to a longer-term problem. So, and the longer-term problem is the labor market. So yeah, let's see how the number comes out today. Again, like I said, if I would have to put a prediction, I'm actually agreeing with another source here that I see here, like around 45K. Actually, that's kind of sounds like maybe about right, but again, let's see what's going to happen. Certainly, I'm kind of leaning a little bit more towards the lower side. That said, maybe the market will get a higher number. Maybe we'll see a number kind of jumping above 60, getting closer to 100,000. Again, I stopped really believing in the honesty of the data. I believe in the market reaction, but in terms of data, it's really difficult to nowadays. It's really difficult to kind of take everything at face value, and it is a mess. It is, what we're seeing right now happening in the world. Everything is a mess, and everybody's trying to make these profits. Everybody's trying to feed us with promises, trying to feed us with lies. So that's where the issue arises. So that's why it's becoming illegal. You want it or not, you end up being skeptical. Although somebody might say, but hey, Darius, we still need to look at something in order to try to explain the market. Well, yeah, this is what we are looking at, these data sets. So we take everything with a pinch of salt. We see the market reaction, but certainly, like I said, we do understand that there could be a few issues in the data collection. Anyway, so yeah, we'll get that. We'll get Canadian numbers as well. The Canadian unemployment rate is expected to decline a little bit by 0.1%. By the way, the U.S. one is expected to decline. The Canadian one is expected to increase, the other way around. Okay. We'll see how that plays out, of course. Michigan consumer sentiment preliminary number is coming out as well. So we'll see how that comes out, how that plays out, and what kind of reaction we'll get there. It's going to be like half an hour after the U.S. market opens. So, ladies and gentlemen, yeah, take a look, take a breathe, and wait for the numbers to come out. We do have a few speeches coming out here and there. But certainly, yes, one of the other pieces of information that we're keeping a very close eye on is the kind of the verdict from the Supreme Court regarding the legality of the tariffs imposed by the U.S. President by the U.S. White House administration last year. So we'll see how that plays out. We also know, apparently, from what I heard, there is a meeting between the U.S. president and some top oil company giants. So everybody's going to be dividing the pie. So they will be seeing who's going to get a bigger slice of the cake, or who's going to be getting like a smaller one, or does anybody even want a cake? So yeah, we'll see how that plays out. Of course, like I said, the there is no morale in all this. Honestly, it's all dirty and political, so it's very difficult to kind of, let's say, look at it. You still look at these events, you still look at the outcomes from these events, but do you have any like sympathy or something? No, unfortunately, because this is just like immoral. Anyway, but the whole world is fine with that, right? Ladies and gentlemen, let's have a look at what's happening with the indices. Nikkei 225, let's have a beautiful move here to the upside. So maybe this is driven by the Japanese consumer household spending, sorry, not the consumer confidence, household spending, and there we go. We're having a nice boost to the upside. I talked about this yesterday in my morning note. If you do subscribe to our my morning notes, which are sent out every Tuesday and Thursday. Basically, this is what I was talking about. I said, look, keep your eyes on this little hurdle here, this 51,000 kind of 28 zone ish, because again, or just in general, the 51,000 zone. Because if we do see a rebound from it, there is a chance for a move back up. However, I will get more excited with the upside if we do push above the 52,636. If that gets cleared, I'll go to the upside. For the downside, a drop below the 51,000 could be seen something of a bearish indication. That said, that could be part of a larger correction to the downside. Shanghai Composite, there we go, rallying beautifully, continue to push higher on the monthly scale here. Look, we still have room, right, until potentially maybe hitting all-time highs, but that's still a lot. Honestly, in terms of percentage-wise, we would need roughly another 50, almost 50% to gain here in order to reach this previous kind of peak which we reached, this all-time high which we reached in 2007. Remember what happened then? Well, the financial crash. So if you would like to draw a downside line from the technical side here, downside line from here, from the top, you will see that we have cleared this downside line, and we're now just kind of pushing further north. So in a way, it has opened the door to some higher levels, but let's not rush into conclusion, because look at this move in general. These are daily candles, right? They're all of them. If some of them were flat, but they were not negative, not really negative. So they were, since kind of mid-December here, we have been pushing higher, higher, and higher, and without any reversal to the downside. So long story short, for now, the Chinese stock Shanghai Composite seems to look quite okay, but again, if we're trying to find some sort of logic, some sort of like a good area of resistance, at the moment I would have to jump back into a monthly chart, and I would have to take a look at maybe some of these levels here, like the 4,317. Could be the case. That's the highest point of July of 2015. Again, let's see what's going to happen here, if we're going to reach that or not. But certainly, at the moment, it is pushing nicely to the upside. Just a second, ladies and gentlemen. I think my mouse has died. Because again, I think the batteries. This is what the good old-fashioned mouse with the wire is, I think it's going to be always a better option. Okay, let me just double check if I can have a quick swap around. There we go, ladies and gentlemen. Yep, I mean, technology is great, but it sometimes fails on you, like in the worst moment. Anyway, back to normal here. So let's jump into Dow Jones Industrial Average, ladies and gentlemen. Okay, look. What can I say? Looking at the monthly chart here, yes, it was a good run yesterday. Looking at the daily chart right now, we closed at around 49,266. Okay, Dow was one of the, or actually, yeah, was the main gainer yesterday. Nasdaq was in the red. S&P, as always, somewhere in the middle, but actually it was flat. Plus 0.01% that it gained yesterday. So okay, basically flat. So look, this is the S&P. This is what happened yesterday. Yep, nothing major, and the Nasdaq did decline, but the Dow, look, For now, what I'm seeing, I think there could be some more positivity, unless we fail to break. Let me just clear up the alerts here that I had set up for myself. So if unless we clear the current all-time high, then I'll get more comfortable with the upside. At the moment, the index is trading around 49,277, the cash index. But look, let's not rush into conclusions, okay? Because at the moment, everything is up in the air. Everything is just kind of struggling to, to kind of find a direction. Because on one hand, we have geopolitical tensions. On the other hand, AI is trying to boost everything, but then but then there's an oil oversupply problem. But then but then why do we need so much oil if it's all there's not much demand for it? Maybe there will be. So, and at the moment, I think yes, I think we need to just go with the flow. It's very difficult to find some sort of logic in the market because, again, like I said, everything is driven by AI. We keep on saying whenever the market wants to have a little bit of a down moment, straight away, Mr. Huang comes out into the rescue with, oh, let's make a deal with this company. Okay. And oh, let's make, and then there's another company saying, oh, let's make a deal with another company, like, especially OpenAI. I think at the moment they're trying to push away a little bit from doing much with OpenAI because, again, um, people do have logic, okay? Because if you're, if a bunch of public traded companies pouring money into a private company, and we don't know what's happening, you don't know what's happening basically with the funds in there, how they're distributed and how they're used. I mean, I'm sorry. Like I said, in the normal world, it's called money laundering, but of course, it's all in the name of AI, because it's gonna make everybody's life better, right? I mean, I do sound like a skeptic right now. Don't get me wrong, but no, I'm not a skeptic. I do like the technology. It's just that the way it is used, that's what I don't like. So the way it's kind of delivered, the message, that's what I don't like. So that's why I'm being, maybe sometimes I can come across a little bit skeptical. Nevertheless, ladies and gentlemen, let's see what's going to happen here. Look, with the Dow here from the technical side, if we do push above the 49,621 zone right here, then yes, great, more buyers could join in. A forthcoming higher high would be confirmed, and potentially, we could start hitting that 50,000. I think that this is what the goal is right now. I think that the 50,000 is the mark, and you know what? I will say it this way: why not to finish off the day with, or should I say, the week by hitting the 50,000 mark on Dow. I think that would be spectacular. I think that would be something a little bit crazy, but certainly quite interesting. So yes, we'll see how that's going to play out. Is it doable today? Look, to move like 700 points or 800 points for Dow, well, that's not really a problem because normally, if we, let's say, take it from like yesterday, from the opening here till here, we kind of moved 413. Did we ever have a moment where we moved 800 points to the upside? What about here? Almost 600. So yeah, we did have a move to the downside here in a way. For example, let's say back in October, we moved around 700 points. Actually, sorry, 900 points. There we go. But that was the downside. Okay. The down moves happen more aggressively, So, but we also get like big, strong moves higher. And in general, I keep on saying that if something is brewing in the market, if we are ready for a bit of a correction back down, then we should get a spike first, because that's how theoretically, in theory, normally it kind of goes. Initially, you go higher, you take out all the short sellers, and this is what happened with silver, and then basically you kind of fall off the cliff. So again, let's see what's going to happen. Let's see how this is going to play out. Certainly, we're watching the NFPs. That's going to be a nice, beautiful show today. So yeah, let's see if it's going to be above 60K. If it's going to be above 60K, look. I don't know if it's going to be seen as a positive. I think that For me, I think what I see, the way I see it, is that if the only way the NFP is going to matter if it's going to jump either above 100K on the upside, right? Or it's going to drop into negative territory again. So if it comes out somewhere in between there, I don't really think that it's going to matter in a way much, because I think everything is driven by right now geopolitics and basically the whole Supreme Court case. Because again, that I think that matters a little bit more. So the S&P 500, yes, look, we created a new all-time high on Wednesday, and this is one of those moments that I like to see. We create a new all-time high, but at the same day we failed to stay above the previous then all-time high. So there we go. And this is exactly what, and this to me is more of a bearish indication. Nasdaq is struggling. It wants to go higher, but it has this downside line on the way, which is taken from the high of the 10th of December. And if that gets cleared, then yes, great. Okay, we'll get a little bit more excited with the upside. However, another obstacle to overcome is the 25,827 territory right here, marked by the highest point of December of last year. So if that gets cleared, amazing, more buyers could join in. At the moment, we're being very careful. We're keeping an eye on the 25,435 zone here in this 20-day SMA within my Bollinger Bands. If that gets cleared, if we fall below that, I'll consider a little bit of a move to the downside. Ladies and gentlemen, let's have a look at what's happening with the German index DAX. What a beautiful doji on the daily chart. And look, certainly this doji is seen as a negative, because after such a big sharp rally, forming something of a doji kind of looks like more of a bearish indication. Let's have a look at what's happening on the weekly. On the weekly, we are quite overstretched actually. we're above the upper bound of the Bollinger Band, and in a way that kind of looks a little bit more shady. I don't really look at this from very bullish perspective. Wait, okay. Look, if the stock market is willing to go higher, and I think that this is we still have some room here on the monthly. I can see, oh my god, yeah, that's a lot. Still another 1,000 kind of 300 point move here. Again, let's not rush into conclusion. I think that maybe from the very short-term perspective, we could see a little bit of a retracement back down. Look at how well this 78.6 here on the Fibonacci extension is working out. Because look, I have drawn this one on Wednesday. I said, look, taken from the lowest point of November to the high of the 12th of December, and then to the low of the 18th of December. We're drawing this Fibonacci extension, which is, again, I do accept the fact that it is a little bit on the, what's the word for that? Subjective side. There we go. It's a little bit on the subjective side. So again, depends on where you're going to draw it, but we're trying to find some sort of logic and trying to utilize all the tools available to us in order to find some sort of logic. And so far, 25,150 level is providing a very nice resistance. Let's see if it can continue to hold. So, but if it clears it, and if we do pop above it, ladies and gentlemen, I am going to consider a move towards that 25,478 zone maybe. Let's see. For now, yes, the index is showing a little bit of weakness. That's absolutely fine, but again, let's not rush into conclusion. The FTSE 100. Okay, this one is pushing back up, and it seems like it wants to go back up, but let's face it. For the FTSE, I will get a little bit more comfortable if we do push above the current all-time high, 10,158. If we clear that, great, I'll go to the upside. Let's jump into the dollar index very quickly. This one, boom, there we go. Wednesday, I talked about this. I said to keep your eyes on this barrier, this 98.76 terror treat. There we go. We're clearing this one right now, and it seems like my next target, the 99.29, could be a nice target. So there we go. Let's see what's going to happen here. If we do go further north, if we do clear this barrier right here, the 99.29, then yes, great, more buyers could join in. For the downside, I would actually prefer to wait for a drop back below the 98.76 territory right here, which is this one, and then yeah, I'll get a little bit more comfortable with the downside. But at the moment, everything's pointing a little bit more towards the upside. Ladies and gentlemen, let's jump into the currency world. AUDUSD, there we go. My rising wedge pattern worked out nicely. Look, I talked about this on Wednesday. I said we were actually here. Remember? We were actually here when I was talking about this, and I said, look, maybe this is a rising wedge, and if it is a rising wedge, then according to all the TA rules, such patterns tend to break to the downside, but the clearance of the lower side is needed, and there we go. Boom, we got a clearance, we got the move. So now let's see if we can actually push further south. Let's see if we can do that, and my next target is the 0.6660 territory right here. Marked by the low of the 31st of December. Let's see if we can clear that one, and if we do clear this one, then basically the pair is in the negative territory for the year. Well, actually, it's going to be in negative territory around here, basically. But hey, it's like it will be below the 31st of December. Sounds a little bit better. AUDNZD, one of my favorite ones, still pushing higher. And okay, can I say so far so good? And I think that it could stay like this. So I'm not gonna really do anything much here, but yeah, I'm gonna stick to it. Jumping into AUDJPY. Okay, this one is quite interesting. Look, in general, this is our risk on, risk off monitor, right? I mean, and it's showing to us right now that there is a little bit of weakness. However, overall, we're still in an uptrend. From the very short-term perspective, we are looking at some problems right now here. We're struggling to overcome the 105.94 territory, but if you're actually looking for some lower levels, I think that this is the clearance that we need to see. If we do get a drop somewhere below the 104.36 territory right here, then yes, great, I'm going to consider a move lower. For now, I'm just observing this one. We're kind of sitting in limbo. We're not really touching this one, but again, it could be quite an interesting option. Right, okay, let's have a look at the other pairs here. EURUSD, there we go. Finding good support zone, finding a good support zone near the 100-day EMA. So looking at this, let's see what's going to happen if we can actually rebound here from this 100-day EMA. If we can, great. More buyers could join in, but if we do clear the 100-day EMA, I think that there is a greater chance for a larger correction back down here towards this upside line, which is somewhat on the tentative side, don't get me wrong, but I think that it should be drawn this way instead. So this is taken from the low of the lowest point of August of last year. So okay, like I said, I'll keep that on the chart. I think it's quite useful. I think it's quite logical, so why not? But again, a drop below the 100-day EMA right now here, shown as the blue line, is needed in order to go further south. Jumping into EUROJPY, this one's pushing back up. Now, this one's an interesting one, right? Overall, it's still on an uptrend, needs to be tidied up a little bit. And we're watching this barrier. The 184 decision, by the way, that's coming up at the end of this month. Let me just go into the economic calendar here. I think it was on the... Let me double check. I think it was maybe Thursday, consumer confidence, or maybe it's going to be Wednesday. BOJ monetary policy meeting minutes. I can't remember when is that coming up. Let me just check the previous Friday. Core inflation, Japan, BOJ interest rate decision. That's the one. Friday 23rd interest rate decision. Now look, at the moment we don't have a forecast, but okay, because they're trying to figure out what's going to happen. Are we going to get a possible increase or not? But certainly, if we do, then we'll see, what's going to happen with the with the Japanese yen? Is it going to get weaker or is it going to get stronger? Normally, theoretically, should get stronger. But again, maybe there will be another driving force. Maybe the stock market will continue rallying, and nobody cares about the interest rate hike from the BOJ. That said, I should warn everybody that they should be caring. But I think it's like a choice not to care, because in general, if you remember, I talked about this before, and I said that the Western economies should start worrying a little bit about this, because if it becomes, if the borrowing in Japan becomes a little bit more expensive, it kind of the every little increase will be felt, and it will be less attractive to invest in like in Western economies, with because those economies are also trying to lower their rates. So because it will basically be, because it will be ending the carry trade kind of ish, a little bit, or not ending, but minimizing it, making it a little bit smaller. Because again, we know that the Japanese investors used to borrow a lot of money from their on their side and put it somewhere abroad, typically in the Western economies, with a higher interest rate, and this way kind of gaining on the difference. So long story short, for now, I am watching this very carefully here. I will say it this way: looking at EURUSD, we're like I said, for me to go higher on this one, I need to see a push above this barrier right there, which is the current highest point, or should I say, not the current highest point, but the highest point of 2025. Quick glance at Euro GBP. What's happening here? Okay, euro is has been declining against the British pound, and we're forming something of a falling channel. At least it seems like that. Let me just check if that's the case. I really don't like this pair, I will be honest with you, but I do look at it, just to see what's happening, and just to kind of, maybe there I'll find some value or something like that. For now, it made a great move to the downside. It tested the 200-day EMA, rebounded, which is also the lower side of the falling channel, and now we're kind of trying to make our way back up. Let's see if that's going to happen, if that's going to be the case. For me to get comfortable with the upside on this one, a break of the upper side of the falling channel would be needed. But at the moment, while we remain inside the this pattern, the short-term trend remains to the downside. Very quickly on GBPUSD, this one's also pushing lower, but look, okay, I think it's going to start ranging or something like that. Unless if it's going to rebound from this 1.34 territory, I think we're going to see a little bit of a range here going into the upcoming days. So let's see what's going to happen here, of course. But certainly, at the moment, GBPUSD is approaching its key area of support near the 1.34. Let's see if it's going to break that. If it's going to break that, then we'll start considering slightly lower levels here. And I'm going to probably aim somewhere for maybe, okay, the 1.3288 is a nice one, but I think that first the option is the 1.3312-ish zone. And then we'll just take it from there. GBPJPY, quick glance. This one's still within the rising channel here. Look, my problem with this is that, okay, such patterns, it depends sometimes on the angle. Because when I see patterns, and if you have followed me for a while now, I do like these patterns when we have, let's say, a strong move to the upside or a big decline to the downside, and then let's say, in this case here, a strong move to the upside followed by a gradual move higher. It kind of follows a correction, through the downside. However, I have to kind of point out one thing, that sometimes it does depend on the angle. If it's, let's say, less than 45 degrees here, then it's kind of I'm leaning a little bit more towards the upside, because then it's kind of a little bit of a flagging out moment. But if we do get let's say, a channel, a rising channel, which is above, like, let's say, 45 above the 45 angle, then kind of it looks more like a correction, possible correction, or possible moment leading to a correction. So yeah, let's see how this is going to play out. For now, I'm being very careful. Like I said, it kind of goes in line with the idea of Maybe the Japanese yen still being a little bit on the weaker side. Maybe, like I said, the stock market will continue rallying. We're waiting for the BOJ to see what they're going to do. Maybe they're not going to go for a hike, and maybe this is what the market is kind of anticipating. So if they're not going to go for a hike, that means that the Japanese yen could continue devaluing against its major counterparts. Oh, I can see Vytautas Drumelis. Hi, good morning. I can see you. I'm waving back right at you. So thank you very much for tuning in. I really appreciate your time. I hope you're going to enjoy the session. So yes, feel free to ask questions if you have any. As I said before, this is a live session. This is kind of this session is meant for questions, and as I keep on saying, like, if I know the answer, I'll tell you, hey, I know the answer. But if I don't know the answer, I will get back to you in the next show. So yeah, Vytautas, hi. Thank you very much for joining in. Really appreciate your time. Okay, look, by the way, Vytautas, while I have you here, what are you trading nowadays? What are you what's your favorite instrument to trade, or maybe you're investing, maybe you're doing both. Let me know in the box in there. So yeah, going back to the markets here, the Forex world, USDCAD, by the way, I need to rush through this a little bit because I have other instruments to go through. Look, USDCAD, okay, this one's an interesting one. Despite, yes, the DXY is pushing a little bit higher right now, but the Canadian dollar certainly is a little bit on the weaker side just because of oil. We are seeing some problems in the oil market. Because again, we're afraid that it's going to be oversupplied right now. With with the old oil that has been captured unlawfully, I would say. But because again, this is it is wrong what's happening in general. There's everybody shouts about, like, that there's like there are rules, and they're like, you cannot go and invade in a country for your interests. You blame one country, but the other country that blames the other country for that does the same thing. So come on, it's like, honestly, like, but the whole world is fine with that, right? As I understood. Anyway, yes, so going back to the situation here, USDCAD, look, we have approached a key area of resistance, and I think that today's Canadian job numbers, I think they're going to be watched carefully. Where are those? January 9th, there we go. So today's Canadian job numbers, so we're watching those together with the US numbers, and if we see some sort of like better figures coming out from there, then yes, great. We could see maybe a little bit of a strengthening moment in the Canadian dollar. That said, I think it could be just temporarily, just a little moment of just a little moment in time that we could see the strengthening of the Canadian dollar, because still it will remain vulnerable to what's happening in the oil market. USDJPY, like I said, so it kind of briefly goes in, actually not briefly even, it goes hand in hand with my idea, which I just already discussed, about the Japanese yen. So for now, yes, we're seeing a push higher. We're seeing a nice, okay, well, let me just grab a copy of this one. So we're approaching this key area of resistance near the 157.89, and look, very simple. If it clears it, great. A forthcoming higher high will be confirmed, potentially attracting more buyers into the game. However, if we're looking at some lower levels, then certainly better option here is to why is it not coming through? Something went wrong. The internet went wrong a little bit here. I hope you can hear me and see me well, ladies and gentlemen. Like I said, my internet connection seemed to drop a little bit, but hey, we're back to normal. It seems like that. Everything is running smoothly. Yep, you can hear me and see me. So we are struggling here to connect. Here. Hopefully this is okay now. Look, okay. Apologies for the disruption in the connection for some reason. Maybe somebody doesn't like what I'm saying. Basically, that's where the issue is. Anyway, okay, coming back to the, like I said, the situation here with the, I'll try to speed it up a little bit. USDJPY, yes, watching this one, this barrier here. If we do get a nice clearance of it, then a great more buyers could join in. USDCHF pushing to the upside, and now the question is to see what's going to happen here. Are we gonna are we going to get eventually a test of this downside line? So far, I think the DXY is pushing higher, so maybe, yes, it could be an interesting moment that we could actually see that test of this little downside line, which is taken from the highest point of November of last year. Okay, ladies and gentlemen, let's jump into commodities. Gold. Gold is flat right now, although silver is going crazy as always. Silver is the metal of 2025, and it's really it has seen demand, shoot in demand, and it's one of the biggest gainers. I'll talk about silver in a bit, but gold has been a little bit on the moderate side. It had its moment, gold, but now it's again stabilized a little bit. Silver because I think everybody's finding value in silver. So congratulations who are holding actually physical silver. Congratulations, because this is just wow. Because I talked about this, and look, I said several times that to me, this is not really very normal. I mean, or actually, if the normality is the fact that we're gonna get a crash here, then yeah, okay, that's fine. I'm gonna consider that because look, we had these similar moments in the past. Look at this, 1980, 2011, and now 2025. We're really reliving a big moment right now. So, are we gonna get a crash at some point? Yes, we will. Will it be as big as this crash? We don't know. We don't know. Maybe it's going to be a little correction or something like that. But maybe it's going to be just a sideways action, move sideways, but and then move a continuous move back up. But I want to say that let's be a little bit more on the careful side here. Okay, let's be. Let's take into consideration these moves and look at this. I mean, I wanted to draw this again. So, for example, if we measured here from 1976 all the way to 1980, this big move here when we had then a reversal, a massive reversal back down. We measure this one and we see like a gain above 1000%. Then we have a move from 2008 all the way to 2011, and we get basically a move around 500%. So now if we do measure a move from 2022 all the way to 2025, basically first of all, we're reducing the amount of years it took us to get there. So maybe actually like somewhere like here, it takes us about like 3 to 4 years, something like that. So around 1000, there we go. So if we take the same kind of timing here, around 3-4 years, again 500. It took us kind of 3-4 years to get to this point. So 500% gain. If we take this one from here, from 2022, also again roughly 3-4 years, it took us around 368. So we are increasing the amount of points, all apart from 1988, basically, in 2011 here. We're increasing the amount of points, but the percentages, of course, are a little on the lower side. That said, this kind of this tendency still is clear that after such a parabolic move, you should be getting a correction, right? The question is, when is that correction going to happen? So I have an alert here set for myself, but I think I need to set it a little bit lower here near the 72.30-40 zone, something around here. I think that this is actually 72.5. I think that if we do drop below the 72.5 zone, I think that this is where maybe we could get a bit of a move lower. At the moment, I'm not in a rush because again, everything the whole AI thing is in demand still. Once we start getting bad numbers or bad coverage, media coverage of the whole AI thing, let's say suddenly they will come out saying, "Oh, you know what? We actually don't know where all the money went. You know, the open AI did fool us. You know, and blah 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 and stuff like that." So, well, duh. Anyway, I think that would be, like I said, a little bit of a show, but anyway. So then we would see, I think, silver, copper drifting nicely to the downside. Speaking of copper, look at this one. This one also rallied like crazy. Look at this. A 76% return here. Not bad. However, it's not platinum. Because platinum, look at this. Boom to the upside. This is from the beginning of 2025. We gained 172% at least. That's from the beginning of 2025 till basically in 2025. That's how much we gained. Silver, for example, gained, let me just show you here very quickly. This is 2025. This is, there we go. This is January. And this is, there we go. 189, almost 190% we gained on silver. Spectacular move. Talk about, talk about speculation. Basically, yeah, it's really, really crazy. But again, the moment I think that they were getting a little bit of clearance, there are rebalancing things happening in the commodity world and precious metals, especially in silver. So, we could see a little bit of a move lower. However, I'm not, like I said, I'm not rushing into conclusion yet because it's way too tempting still to aim higher. But again, at the same time, are you gonna buy silver at these levels? If you're in the very long term game, let's say for 30 years or something, then yeah, congratulations, you can do that. But I think that at one point it will correct lower. It should correct lower, maybe back to something like $50. I think this is the new norm. I think $50 could be the new norm. But hey, let's not rush into conclusion, okay? Because I think that this is like I said, what I would be aiming for. If we have this upside line, I think that $60 also could be a nice good target. But again, correction is required. Let me know your thoughts, ladies and gentlemen. Whoever's watching right now, what do you think? Are we going to see silver maybe hitting the 100 level? That could be an interesting option. Let's jump into sugar, one of my favorite ones here. This one is kind of moving sideways, but actually it could present itself with some nice value like later on. But again, let's not rush into conclusion yet, of course. For now, we're observing the price action here, and let's see if we can clear the 15.34 zone. If we can do that, at the same time, we could jump above the 100-day EMA. Oil, of course, our beloved oil, or one country's everybody's beloved oil. The main focus of everything. Look, what I want to do here is I want to get rid of everything and start fresh, remove all the 16 dries here. So I will say it this way: I'm still bearish on the price here. I said it before and I'll say it again. I'm still bearish. I will continue to remain bearish. And I think that if for sure the Venezuela oil will hit the market, then yep. And if the war in Ukraine ends, then yes, we could see oil actually dropping quite a lot. Again, what is the level? Are we going to get a drop like all the way back to 42? I think that's possible. I think that I do like this area. I do like this area a lot, but look, there's a lot of ifs. There's a lot of if statements here before we could actually aim, for the $42 mark. So this is my target. This is my big target on the on oil here, on WTI oil. So hey, there we go. That's what I'm gonna do, and yeah, we'll go from there. But first, I need to see a clearance of the $55 mark. If I can get that, great, amazing. I will go to the downside. At the moment, it seems like we want to go higher, but I should warn the bulls not to get their hopes up yet, because look, there's a bunch of, I'm not going to draw all of them, but you probably can see it yourself. There's a bunch of downside lines that could hold first. We could see maybe a move all the way here. Hey, but that would be a lot. However, at the moment, I'm just maybe considering some of these levels here. This one's a good one. And if we do get a clearance of this downside line, okay, wonderful, we could go higher. But like I said, I don't want to rush into conclusions yet. I think that there could be some more downside, but again, this downside for me, I need to see a clearance of this $55 mark. Very quickly on natural gas, by the way, Brent oil, similar story. Oh, but this one actually, there we go, breaking the upper side of the falling channel. So there we go, that's what I'm saying. They could see a little bit of action to the upside, but yep, again, the upside is still limited. Maybe you could limit with the 100-day EMA here. Let's see. I think for now, yes, we could continue targeting slightly higher levels, but only up until maybe the $64 mark, up until there. Natural gas, very quickly, stalling here. That's actually okay, to be honest. I think it's going to take a little bit of time here to settle and to understand what it wants to do further. Does it want to go break the upside line here, or actually does it want to break the downside line and go to the upside? Let's see. For now, like I said, I'm neutral on this one. We got the move. Let's see what's going to happen next. And let's jump into the crypto world. Bitcoin. So look, I talked about Bitcoin, and I was saying that, look, this is a good area of resistance, the 94,000 kind of 600-ish zone. We retraced a lot from there. Now the question is, can we go lower and test this upside line? Well, so far so good. I think that, looking at Bitcoin right now in the past half hour, in this half hour, yeah, it did correct a lot to the downside. It is finding currently good support area, but I think that there's a little bit more room left to the downside. So let's see if this upside line taken from the lowest point of December, if it can provide support and we can rebound from here. If we can, great. But if we cannot, well, ladies and gentlemen, I think that there could be some more downside like this. Bitcoin Cash, I do like this one. It seems like it's flagging out after we had a great poll here, and now it's flagging out. So let's see what's going to happen next. If we can push back above the 650 territory, then great, I'll go to the upside. But at the moment, I am just being very, very careful here. I think there could be a little bit of a moment here to the downside, not much. This upside line, that would be great, I think, but I think that there is this 20-day SMA within the Bollinger Band here in the middle line, which could be a nice good area of support. Ripple is drifting back to that psychological 2 level, and I think that at this point we will just keep an eye on that psychological 2 level. If it continues to provide support, or any area slightly above the 2 psychological 2 level, then yes, I think that there is still upside momentum, upside scenarios possible. Ethereum looking good. Ethereum is looking good. We're approaching this upside line as well. This is something that the market is also keeping a close eye on. Again, look, in general, there is temptation, to go along on this one, but I have to say that be very careful. We failed to create a higher high here recently, and we have been creating higher lows, but we struggled to create a higher high. So we could say that we're coiling up, but because it's not a perfect triangle, that's why we need to be a little bit on the careful side here. So that's why, it could end up coiling up, don't get me wrong, but certainly a breakout through one of the levels would be needed. Litecoin, let's have a look at that one. I like Litecoin. It's very nice, very technical. At the moment, it's found support near this kind of 80 $80 mark. So if this $80 mark continues to provide support, then great. I mean, I'm going to consider a move back up. But if it breaks below the $80 mark, ooh, no, that's going to be interesting. And I think that we could see some movement here to the downside. Dogecoin, look, I think we need some news from Elon Musk or something, because this one is not really doing much. So it had a great move, but yeah, it's really vulnerable to the tweets or the X's that Musk will post on his X. Yeah, for now, like I said, for now it's an interesting one. It's a very interesting one, and let's see what's going to happen here. Okay, so Polkadot. Polkadot found resistance near this downside line, which is taken from the highest point of September of last year. We're now seeing a little bit of retracement back down, but look, I'll say it this way: as long as we stay above this psychological 2 zone, I think that there is a chance of a rebound and a push back up. But if we start clearing the 2 territory, we'd fall below the 1.9640 zone right here somewhere. Ooh, now I think, oh, actually, you know what? Not even that one. I think if we fall below the 1.9250, if we do fall below that, then yes, great. I think more sellers here could join in. Ladies and gentlemen, that is a wrap. Too bad I didn't get any questions from you guys. I mean, I saw that you were tuning in. So Vytautas, first of all, thank you very much for jumping in. I really appreciate your time. Even just a simple wave that kind of brightens up your day. Really, like I said, really appreciate that. So thank you very much. I hope you all will have a beautiful trading day. I hope everybody's going to stay safe. Will have their stop losses in place. You will only risk what you can afford to lose. You will not overtrade, and everything will be fine. I shall see you on Monday, ladies and gentlemen. Monday. Have a beautiful weekend. Yes, and I'll see you on Monday. Bye for now.